Ladies and gentlemen, welcome back to another episode of the Cryptonews Weekly Roundup. Your host here, Matt Zahab, another solo dolo episode this week. Guys, happy holidays, Merry Christmas, and hope everyone got to spend some good time with their family, got to touch a little grass, maybe touch a little snow, and just de-rust and spend a little time away from the laptop and away from staring at the price action. Speaking of price action, let's jump into it. Pretty bad week across the board here, guys. Everything is red, as you can see on this beautiful big board ahead of me. Bitcoin down 1.5% to 87K. ETH down 2%, under 3K to 2.9. BNB down 2, XRP down 2, Solana down 3, Dogecoin, Cardano, the biggest losers of the week, down 7.5% each. And the only two gainers of the week, as you guys can see, Bitcoin Cash up 0.8%, just under 1%, and Hyperliquid up 3.3%, just under $25, sitting at $24.96 per hype. Okay, let's get into it. This was a bit of a weird one this week, guys. Biggest piece of news this week: Aave Labs, huge controversy, unilaterally pushing a critical governance proposal to vote without notifying its author. Pretty darn weird here. This threatens brand ownership. This threatens the DeFi protocol's DAO and its founding company. Very hasty move. No one really knew what was going on. However, Ernesto Boado, co-founder of BGD Labs and the proposal's author, publicly disavowed Aave Labs' decision to submit his ownership proposal to Snapshot. He said, and I quote, "This is not in ethos my proposal. Aave Labs has unilaterally submitted my proposal to vote in a rush with my name on it and without notifying me at all. Breaks all codes of community trust." Super weird here, and we have not seen everything play out. So as it does, we will keep you guys posted. Moving forward, the Fed Reserve has opened up the door to a new type of central bank account that could reshape how crypto and payment-focused firms across the U.S. banking system work moving forward. This would be called a payment account. This proposal builds on earlier discussions around a so-called Sting Master accounts, formalizing the idea of payment-only Fed accounts for non-bank firms. That would really just open up the door to everything, which would be huge for crypto and stablecoins as well. Speaking of the Fed, SEC has charged a fake crypto platform and AI-branded investment clubs, multiple of them, over a $14 million retail investor scam. The fraudsters allegedly use social media ads and WhatsApp groups to promote fake AI trading tips and platforms. Regulators say that no real trading occurred and investor funds were stolen and routed overseas. Pretty wild stuff here. More on the Fed. Michael Selig was sworn in on Sunday as the 16th chairman of the Commodity Futures Trading Commission, taking control of the derivatives regulator as acting chair. Caroline Pham departed after nearly 4 years at the agency. Pham's exit concludes a tenure marked by aggressive pro-crypto initiatives and regulatory modernization effects that helped the CFTC learn more and adopt digital asset oversight. BlackRock in the news. BlackRock named its spot Bitcoin ETF a top 2025 investment theme alongside treasuries and big tech. Aave, which is BlackRock's biggest Bitcoin ETF, attracted over $25 billion in inflows despite Bitcoin's price decline. That is absolutely wild. The fund also leads rivals by a wide margin, reinforcing Bitcoin's role in institutional portfolios. Speaking of Bitcoin Hashrate fell 4% in December, guys. This is a pattern that VanEck says has historically preceded stronger price returns. Miner profitability is under pressure as lower BTC prices and higher costs force capacity offline. Part of the hash rate decline may be permanent, but with mining power shifting toward AI workloads, this could signal something very bullish for Bitcoin, as it historically does. Polymarket in the news again this week. Polymarket got hacked. There's been a recent wave of wallet drains affecting user accounts, and this was caused by a security vulnerability tied to a third-party authentication provider. This was following days of many complaints from users who said their balances were emptied after an unexplained login attempt. Polymarket has said the issue has now been fixed and that there's no ongoing risk, but it has not disclosed how many users were affected or the total value of funds lost. Moving forward, Peter Thiel in the news this week. Peter Thiel has backed a bank called Erebor. They have raised $350 million at a $4.35 billion valuation. This was also co-founded by Andrew Chief Polymarket, who's been everywhere in the news recently. Lux Capital led the rounds. alongside other partners like Founder Fund, APC, and Han Ventures. The fundraising arrives as U.S. regulators move Erebor closer to taking deposits, a milestone that still carries weight in a sector shaped by the 2023 collapse of Silicon Valley Bank and the scramble that followed for stable, regulated banking access. Last piece of news this week, guys, and stay safe as always. Trust Wallet, and I know many of us use Trust Wallet. The multi-chain crypto provider Trust Wallet has confirmed a security breach. This was a couple days ago, yesterday rather, on Thursday, with estimated initial losses exceeding 6 million. Blockchain security expert Zahab flagged the incident after multiple Trust Wallet users experienced unauthorized fund outflows. This happened in Trust Wallet browser extension version 2.68 only, and users with browser extension 2.68 should disable and upgrade immediately to browser extension 2.69. Guys, that marks another episode of the Cryptonews Weekly Roundup. Hope you enjoyed this one. Always a pleasure doing this with you guys, doing this unboxing day. Been a couple great days with the fam. We love you guys. Thanks for tuning in. If you enjoyed it, please do subscribe, hammer that like button, and every week we'll be back giving you the hottest news that happens in crypto. The next episode will air in the new year. So happy new year, everyone. Love you guys. And let's grow our bags next year, and let's keep on staying happy, healthy, and wealthy. Love you guys. See you on the next one.